So, looking at macroeconomic trends in a lot of these countries, especially Western countries, if you look at the demographic inversion and if you look at the fact that our governments, all these governments have been running on a debt based system, especially after World War II, after the currencies were taken off the gold standard and they had these social welfare programs, and the assumption was that each generation will be larger than the last. Like everybody will have children that are above replacement level. And that worked until you had the baby boomers. And the United States, it's not so bad. The millennial generation is actually bigger in the United States than it is in other countries, like in Canada, like in Australia, like in Germany, and etc. But what we're experiencing, what we're beginning to experience, is the effects of the demographic inversion, which started to happen in a lot of parts of the world in the 1970s. We are, and I say we, Western countries, developed countries, we are experiencing a lack of adults, a lack of workers, a lack of taxpayers. More and more people are retiring. We're starting to look like Japan, where there are actually more older people than there are younger people. So what's happening is that you have a relative fewer younger people that are paying into the system as taxpayers to support a larger group of older people. In order for that to work, governments have to find ways to extract wealth out of the economy from, financially. They have to print up a lot of currency. They have to buy their own debt, both short-term and long-term debt. And that crowds out the market. That makes it so that you have this currency. It is inflationary, but because of the demographics, it's also deflationary. So you have what's called stagflation, which is a mix of inflation and deflation at the same time. That is coming to the rest of the world very soon. Europe is a case in point. You have a lot of countries, particularly in Southern Europe, like Italy, like in Greece, like in Spain, Portugal, Germany, the UK, where you have this demographic inversion, and these are countries that have a very high debt load. Their government and their corporations all have very high debt loads. You got the United States, which is bad enough. It's actually not as bad in the United States as it is in other developed countries, but nonetheless, Americans will feel it too. In order for this to continue, the governments are going to have to find ways to extract wealth. So I don't think it's going to be very pleasant in the future unless politically we can change things. It really doesn't look good in countries like China, Japan, South Korea, the European countries, Australia, etc. It looks really bad. I can't speak for Russia. Now, Russia is interesting because although they do have bad demographics and they're not a country that has accumulated wealth, in terms of household wealth like developed countries have. Russia is what's called a second world country. Not a first world, not a third world, but it's kind of somewhere in the middle. However, it does produce the basic things that the world needs: oil, natural gas, food, fertilizer, etc. So Russia, I'm not sure. It actually economically might be okay, even though it might not be pleasant. Russia actually might be better off than other developed countries will be in the coming decades, although Russia does have a lot of problems. You got countries like Brazil, which do have a lot of natural resources, but Brazil has the same problem. They have a demographic inversion, but instead of happening in the 1970s, it happened in the 2000s. So Brazil might march on for a few more decades, but it will eventually hit Brazil. And Brazil is also the recipient of a lot of foreign investment. So if these developed countries go down, then Brazil is not going to receive the inflows of that foreign investment. So it's not looking pleasant. You know, if things are bad in Brazil now, they're going to get worse. So it doesn't look good. I'm not going to give financial advice, but I think on the individual level, you know, my viewers, I would suggest you look into your own situation and think, okay, you know, think about different scenarios, what might happen, how can I protect myself? You know, what can I do? You know, maybe I can, you know, maybe you don't trust the banks. You know, maybe you want to take your currency out. I'm not saying you should do this. Invest in gold, silver, Bitcoin, you know, or another currency. I don't have high hopes for the yuan or the euro. The U.S. dollar will probably still see inflation, although the U.S. dollar, again, with all the developed countries, the United States is probably one of the better countries to be in. You know, inflation is going to be high. Am I going to get? Is it worth it to buy bonds at, you know, a 5% interest rate when inflation is, you know, 12 to 15%? Obviously not, because you're losing. You know, say if we have 10% inflation and you got a market that, you know, that pays 5%, you're still losing 5%. So anyway, just want to put that out there.